All right. Good day, everyone. Welcome to my YouTube channel. My name is DF Bassi, and if you're new to my channel, please kindly click the subscribe button and the like button. The more you like and share the video to people who know they might need this and also learn a lot from it. So all right, so without further ado, let's get into the video. Today, I'll be showing you guys the best top-down analysis. It's easy, simple, and quick. I'll be showing this under 20 minutes, right? So what is basically top-down analysis? Top-down analysis is basically breaking down um from your monthly to your weekly. Let me type this out for you. Breaking down from your weekly, monthly, weekly, then daily, we have the 4 hour and 1 hour for, let's say, confirmation, right? So you have breaking down from monthly to your weekly, then to your daily. So now all this, I'm sure that most of you watching this by now should know, um, these are time frames. The monthly, this is the monthly time frame. Then this is the weekly time frame. This is the daily time frame. This is the 4 hour time frame. Then this is the 1 hour time frame. Then I'm sure all of you must know that all these time frames from the name daily emphasize that every candlestick created opens and closes in one day. So all the economic data, all these candlesticks here are representation of economic data happening, right, in the world. So these are statistical representation of all those economic data. So now all this time frame categorize and shows that within the space of this time to this time on the economic data, this is what happened and this is how it affected the market, and these are the prices which things were bought or sold at. Do you understand? So now for this, I'll be using NAS 100, that's US 100, you guys know. So now for top-down analysis, simple top-down analysis, start from the monthly. For the monthly, you want to understand the draw of liquidity, understand the flow where the market is going to. So now from this, we can understand looking. Now, most times the mistakes many people make is they don't focus, after focusing on past data, they don't focus on the current data. So let's say from here down to here, for downwards, from there downwards is past data. This is current data now. This is what is happening in the market now. This is the area. So whatever you should be doing, you should be looking for understanding what market is doing in this area in order to take advantage of the information and make money from it. Right. So all of these are past data, but once you're doing top-down analysis, you need to understand what the past data was and what the current data is, and really get in-depth understanding of what is happening in the current data so that you can know where to enter from if you're taking buys or sells. So from this past data, you can see that US 100 was bullish, has been bullish, and moreover, everybody's expecting bullish moves. So now let's go to the monthly time frame. Looking at this, we have seen bullish. It has been bullish from time. You understand? Just like gold, it has always been bullish. US 100 has always been bullish. So anything, anybody, mostly they'll be looking for buys. But inside this bullish move, there'll always be retracement, just like in gold, there'll always be retracement. So there are times when market will be selling. So this is the monthly time frame. Without understanding, we know that, oh, this guy is bullish. So now where we're breaking down to the weekly. Remember, now I've jumped down to the weekly. Now on the weekly time frame, what do we see? Now from the weekly time frame, we don't focus on past data because the monthly will show you already everything for me. The monthly has shown everything that it's bullish. So the weekly will just um pinpoint some of those points for me. So already what I'm looking at on the weekly, I'm looking at the current data that is from here to here. right? So now on the weekly, what can you see here? You can see rejections. Now, what happened? Price came down, broke structure. Now there was supposed to be a break of structure to the upside, continuing the overall buy structure, which we know that US 100 is bullish. But no, it didn't break. It tapped and sold. And since then, this guy has been selling. You can see the sales, right? You can see the sales. So from here, from that information, as simple as it is, I can identify that there was no break of structure to the upside, no break of structure to the upside. Hence, market reached this point and rejected and closed what it closed inside this zone. So it didn't close bullish or close with full candle, expecting more buys, but it closed inside back into the zone. And the next candle pulled up, mitigated, and started dropping. So we have been having this over time this week. So this like 3 weeks, 1 month, 3 weeks, 1 month, 3 weeks, 1 month, and so on. I think this should be from 20 December. So now after understanding that on the weekly time frame, right? I can see that market on the weekly, still looking at the chart, on the weekly, I can see that price have tried severally to push, buyers have tried to push market upward, but sellers have been taken over. That's hence these long weeks you're seeing here. Hence all these long weeks. Buyers have tried pushing price up, but the sellers have still kept control of the over the market. So now as a trader, you don't get to decide what will happen in the market. You don't get to tell the market where to go. What your job is to identify the trend of the market and follow the trend and follow wherever the market is going to make money and make money from it. So now from the weekly time frame, I've discovered that this guy is bearish. Now you break down to your daily time frame. What you be looking for your daily time frames, blocks which potentially market might come back to respect. So from here, we can mark out this other block. Market might come back there. Can mark out this block here as well. Then you also have this other block. I'll use a line to mark out this block. Although, so perfect. Now, have you seen that we don't really need all of this from here? We don't need all of this data. So now, why we still need data around here is basically this other block. Since since we have been expecting bullish moves based on the market is still bullish, likely market was to respect this other block. But why this other block will not hold was before another block is to hold in a bullish structure, that other block must have to break structure first. But in some scenarios, this other block might just from there build up structures and start buying. But before it builds all those structures, you see a little bit of inner structures on your 4 hour time frame. I'll tell you, okay, this guy is now building. Then from there, you can join the buys. But as for now, what we see here, what I'm seeing here is a bearish market. So breaking down to the 4 hour time frame. Now on the 4 hour time frame, what do you see? You can see a clean, clear market. You can see your continuous break of structure to the downside. So now what I do is I use my 4 hours to understand the structure of the market and understand, refine my other blocks. So now this other block I marked out on the daily. Can you see now I've refined it? I can refine it a bit smaller, right? Let's go back to this other block I marked out in the daily, refine it a bit smaller. And here, there's another block here which I marked, which was much. I can refine this now to this. So now we have 3 blocks. So now when you're trading, when you're going to take a trade, you're going to consider the blocks that are closer to the current market price, right? So I would have taken this guy as a block, but he's too close. For me, he's too close, but most people would love to trade from here. But I would love to trade for there. Why wouldn't I not love to trade from there? Because looking at this, there was is a little bit accumulation over here. So I feel market might want to come back and take this out as liquidity, tap this block and sell. So now looking at this structure from here, you can see our break of structure to the downside, identifying the bearish trend. You use your 4 hours to identify your structures. 4 hours will show you if the market is actually very bullish or is very bearish. So now from here we can all of this we can see that market is very bearish. So what are we looking for? Sells. And practically with what I've traded, if you there's a video there where I've showed my trading strategy. What I trade, mark out your liquidity over here. Because I told you guys I'm going to take this as my liquidity. The expecting market to sweep this block because there will be a lot of people, there will be a lot of orders here. I expect market to sweep this, tap this block and sell. This block is unmitigated. But this right here is look like it's a big mitigated. This guy is big mitigated. This guy is the only guy that is not mitigated. This is the only block around this accumulation zone that looks like it's not mitigated and has a good fair value gap. I mean, very, very clean fair value gap. You know, the Bible's standard version of an other block is green and bearish candle with a fair value gap. So this looks valid, but it's too close, too close. But it might hold price, might hold price. So this is where I'll be expecting what myself. And what I'll do, I'll just set my limit, keep my SL above here. Or what will I be targeting? I'll be targeting my one so 3 as normal. And expect the trade to play out. So if you can see, watch closely, we broke down from the monthly to the weekly to the daily, then to the 4 hours. Then if I go, I'm a swing trader and an intraday trader, so I basically did 4 hours. Then if I break down to the 1 hour, the only thing that takes me down to the 1 hour is if I want to get cleaner entries. If I want to, because most times this kind of trades is trades that you set sell limit or buy limits are aggressive trades. So if you want to be more conservative and use confirmations for your trade, I break down to 1 hour. That's where I look for most times I look for a change in state of delivery, right? I look for a change in state of delivery, or I look for mitigation of a bullish and engulfing. So most likely something like this. Price mitigates here and sells set to limit. Something like this. Mitigation of this block. Yeah. More like change of state. Forget all the names people call it. Change of state is more like change of character. So basically looking for a change of character. Once you have a first change of character, the other block that created that first change is what you mark out from your 1 hour. And basically, if it's not too clear, you can break down to your 30 minutes. So that's that for that as far as that's concerned. So remember, you start from what your monthly. From your monthly, you go down to your weekly. From your weekly, you go down to the daily. From the daily, that's when everything starts. You mark out your other blocks from the daily. Once you mark out your other blocks on the daily, you go to the 4 hour, you progress to your 4 hours to, I mean, progress to your 4 hours to understand the structure. So now if you can see on the 4 hours, the structure is as clean as as this. Okay, this was the 1 hour, sorry. If you should go to the 4 hours, you can see that the structures here are very clean. Then you can also hold on. This is the 4 hours. You can see the structures are clean, are very clean. Then if you want to go back to past data, you should also try and backtest this. You want to go back to past data, you can see how it's showing you clean other blocks you could buy from a bullish market. Clean blocks you could buy from the bullish. This would have been my desired block to buy from, but market didn't mitigate. Where's the nearest block? You see, market respected this block. It tapped. I wouldn't have gotten in because I was expecting market to tap here. But where will I get in is here, the second tap, and you ride it to the top. So the 4 hours gives you clear, clear view of the overall market structure, the market trend. So most times I see people they trade against the trend. Now you still see people, many people trying to buy US 100. But no, this guy is very bearish as he is currently. Though the overall trend from what we saw on the daily and the weekly, from the monthly is bullish. But what's happening, real time market, current price, this is the current price. And what's happening around here, this guy is bearish. You can see three breakout structures to the downside, validating the self. So I've given you guys a free setup, and if you can utilize this information I've given you very much, you'll make so much money from the market, right? So subscribe if you're new to my channel, kindly click the subscribe button and like and share the video to reach more viewers. All right, thank you. I remain DF Bassi.